I'm sorry, Jan, and everyone watching. Welcome to another Tech Check Plus live stream. Jan, good morning. Jan van Eck, of course, the CEO of VanEck, many ETFs, which our audience will know. How are you?
I'm doing really well. Thank you, Deirdre.
You know, I can't believe I can't get this right. I think that's like the third time I've done this. Anyways, it's when it's live TV, at least it's not up to me to press the mute button. Let's start. Let's dive right into it. For our audience, why don't you explain the difference? We've been talking about it a lot on air between a Bitcoin's future ETF and a spot ETF.
Sure. Yes, we sponsor a Bitcoin futures ETF, which basically it's what it implies. The ETF invests in Bitcoin futures. And what investors need to know is that the shape of the futures curves will then affect their returns. Now, in flat or down markets, Bitcoin investors don't really need to care about that. But in strong upward markets, the futures curve has traded a contango, which basically means you're getting punished for investing in Bitcoin futures rather than Bitcoin spot.
Right. And I know it took some time to even get a futures ETF approved. And now we're sort of seeing the same process for a spot ETF. I think there's been 6, and now Grayscale's proposed spot ETF is being looked at. Why is this so difficult? Why is the SEC willing to approve a futures Bitcoin ETF instead of a spot one?
Well, it's really because the whole world of crypto is unregulated right now from a federal perspective. Most of the regulation that's happening is happening at the state level, California, New York, Wyoming. And so the regulators are trying to figure out what kind of jurisdiction they have. Certainly, if something is clearly a security, it falls within the SEC's jurisdiction. But Bitcoin is probably not a security by that definition. But there's a lot of discussion going on about regulation. And I think the SEC right now is what I call holding a Bitcoin ETF approval hostage. And they're saying they're concerned about manipulation in the underlying spot Bitcoin markets, the Coinbase markets, if you will, Gemini markets. And so they're basically saying, well, I'm not going to approve your little ETF until we get clear jurisdiction over the underlying crypto markets.
What does clearer jurisdiction look like? And also, this is sort of the difference, the reason why they're maybe more comfortable with the futures ETF, because it relies on, a government-approved Chicago exchange, right? If they were to approve a spot Bitcoin ETF, they'd have to accept a Coinbase or a Gemini or some of these other platforms that, as of now, are less regulated.
I mean, right now, crypto is, as we discussed, mainly, it's like the insurance market. There is no federal regulator that covers insurance companies. They're all regulated at the state level. So Washington hasn't even decided whether crypto should be regulated at the federal level. And if so, should it be the SEC, the CFTC, or banking regulators? And right now, it's just kind of gridlock in DC. So that's why the prospects for a Bitcoin ETF are really not going very far, because there's a lot of uncertainty as to which regulator will be the lead regulator for crypto.
So are you optimistic then that this is going to happen? Is the SEC and other regulators, are they moving fast enough on this? And what's the downside if we don't get a spot Bitcoin ETF, but other countries, for example, are able to have them?
Listen, you run a tech show, right? Regulators can never stay in touch with the speed of change in technology. And the US right now is sort of in the unfriendly camp. We have an operation in Europe. We have 8 separate ETNs approved in Europe, listed on the major exchanges that invest directly in token. One is Bitcoin. 6 other are individual tokens, and then we have a multi-token ETF. So the US is already far behind, and it doesn't look like they're catching up. I mean, there are a lot of people of good faith in Congress and the regulators that we're speaking to about stablecoins, about our ETF application, as well as regulators in New York. But the US, if you have to, score it, we're way behind. We're years behind other countries at this point.
Well, if you do have to score it, though, you got to take sort of this whole look, right? And yes, I mean, behind maybe when you compare us to Europe, but what about a China, right, which has clamped down on Bitcoin and cryptocurrencies as a whole. And I wonder, do you think there are any concerns? Are there reasons that the US should be moving slowly on this? Yes, I run a tech show, but I also cover companies like Facebook and Google and others that have grown really quickly, and you couldn't have foreseen some of the consequences that regulators are now trying to scale back.
Oh, that's such a softball question. I love this question because
We're not going to have you on again, Jan, if you say I ask softball questions. Go ahead.
But no, because the whole point about the concern about the tech giants is concentration of power, right? And the whole point about all of crypto is decentralization of power. It's basically there is no gatekeeper to stop people from either posting tweets or giving money to GoFundMe sites or having podcasts on Spotify. There's no central authority. So I think that's really the exciting thing. That's the very disruptive thing about crypto that I like to talk about, and that I think a lot of people see as well.
And you're making that Web3 decentralization argument, which in theory is really great, but that's been picked apart. Also, you even take a cryptocurrency like Bitcoin, which is held its holdings are actually quite concentrated.
Well, you can criticize a lot of different things about the cryptocurrencies, but I definitely think that Bitcoin itself is very decentralized, and it proved that when China stopped the mining and trading of Bitcoin last year. The network suddenly had well over a third of its, I call them validators, shut off overnight, and the network kind of adjusted, and it worked and continued to work nonstop, 24 hours a day, slightly different speed, but it was resilient.
That's a fair point. Let's talk a little bit about some of the SEC's concerns and the reasons that it cited in not approving a spot ETF. One of those cases was stablecoins. How do you feel? And does the role of unregulated stablecoins in the crypto ecosystem, does that concern you?
I actually think that stable coins operate very much like ETFs, and I actually don't understand why the SEC doesn't just say, "Hey, listen, these are kind of like ETFs. Let's bring them into our regulatory framework." And I've been saying this to them as well. And they're okay. The main thing is that governments are concerned about what stands behind a stable coin. If you have $100 billion in a stable coin, is there anything behind it to protect the holders of that stable coin? The SEC has been doing that with mutual funds and ETFs for decades, right, since 1940. So I think their regulations are very well suited. What's different is that stable coins are used for transaction purposes, and obviously mutual funds are not used for transactions. But that's just a couple of exemptions, I think, in the securities laws, and we could have some trial stable coins in the US.
So you think that stable coins like Tether and Circle should be brought under the same standards as mutual funds? They should have to have regular audits and show what's backing them?
Why not? I mean,
well, they don't want to. I mean, they've promised audits for, even the Tether executives said that they were going to be presenting an audit. This was, last year. We haven't seen anything. So why are they resisting it so much? Is that cause for concern? If they had the backing, why wouldn't they?
The offshore stable coins like Tether, all they get is lawsuits and attacks from the U.S. government. But the SEC can very well set up a trial regime where people can come in and register a stable coin. It's pretty easy to launch an ETF. You don't need a ton of regulatory capital or anything like that, and just see how it goes for a couple of years.
So why aren't they doing that? I mean, Gary Gensler, Jay Powell has talked about stable coins, a US backed digital currency. What's the holdup there, do you think? When you talk to regulators, what did they say?
Well, there's a bit, if the Biden administration had a working group that came out in November of last year, and it wasn't very helpful because basically banking regulators want to regulate stable coins. And then the SEC wants to. So they're fighting at that political level. What I say is, look, if you take a stable coin that's privately issued like Tether, the government is not guaranteeing the assets behind it. They're just supervising it. And
Right.
frankly, with good custody, no mutual fund or ETF has ever really blown up. Okay, so that's point number one. Point number two
Still
is,
early days though.
well, yeah, but but ETFs and mutual funds, that structure is a healthy private sector, I'll call it structure. The question is, when you get banking regulators involved, they suddenly want to maybe provide some level of government insurance. That's been
Right.
floated. I think that's a kind of super aggressive. Why should this category of funds be protected with government insurance like bank deposits? I think we need to kind of really clearly differentiate the two and have investors understand the potential risks that can occur with stable coins and let them take the risks rather than the government through
Right.
insurance.
So what you're describing though sounds like gridlock and politics. How optimistic are you then about when that first spot Bitcoin ETF gets approval?
Going back to the Bitcoin, I listen. I actually think there's frustration in Washington. It reached a low in
Mhm.
December, to be honest. I've been involved in some conversations that I think there might be some kind of progress this year, cooperation between the SEC and Congress. But is something going to get approved in an election year? Deirdre, I think the chances are kind of a long shot there. So I think we might get a framework for progress after an election. That would be the most optimistic scenario. But the SEC has just got to give up its insistence that it's going to get jurisdiction, because that's just not really clear that that's going to be the case. And they don't regulate or all the underlying markets of everything that
Yeah.
goes into ETFs.
Right. So then when you look at what, also I just want to get a basic understanding too for our audience, what's the difference between owning a Bitcoin spot ETF versus just owning the underlying asset on one of these exchanges?
It's pretty much the same thing, right? It's just the extra fees at the ETF level. But you can hold a Bitcoin ETF in your brokerage account. You get
Mhm.
better tax reporting, I would argue,
Right.
and you get the resiliency and supervision of the national securities exchanges like Nasdaq or NYSE.
Are the Coinbases of the world not trying to do that?
They're trying, but they go down every once in a while, and it's just not the same regulatory certainty. They do provide tax statements, in
Yeah.
their defense, so it's not a huge difference. It's really a convenient story, is what I would say.
Right. Now, in the US, you focused on Bitcoin ETFs, but in Europe, I know that you guys have one that it's a bucket that holds the largest cryptocurrencies with the greatest liquidity. What has response been like, especially over the last few months where we have seen this big drawdown in crypto?
We don't get as much clarity about how ETFs trade in Europe as we do in the United States, but the data I've seen is that it's really on what's called on-exchange trading, or retail investors that are trading our crypto ETNs in Europe, and that includes the multi-token crypto leaders ETN that we launched last week. It's not institutions that are involved yet. A lot of people talk about institutional investors getting involved in crypto. I think
Mhm.
we're really early days there.
Really early days. And so does a spot Bitcoin ETF with sort of the advantages that you outlined, does that move the needle for institutions and thus sort of the whole complex?
It helps, but as you saw with the Bitcoin futures ETF, there's a certain pocket of money that wants to move into an ETF, but there's a lot, hundreds of billions of dollars, yet to dip their
Mhm.
toe in the water.
And Jan, we often ask this of CEOs of, almost anyone that comes on the network that's talking about cryptocurrencies. Do you personally hold some yourself?
Oh yes, and I think because I look at crypto, which is sold off heavily in the markets now, as part of a general category of growth investments. These
Mhm.
other tech investments, and I think a lot of them were really overvalued. What we've been doing corporately is trying to invest in the early stage venture capital funds. That's still where there's relative value. There wasn't a lot of relative value in growth
Right.
investments generally at the end of last year, but things are getting cheaper now.
Yeah, they certainly are. Are you primarily Bitcoin or are you interested in some of the others?
I personally, about a week ago, started buying some more Bitcoin when it was in the 30s. I think Bitcoin is going much higher, but I think it's maturing. So I think its corrections are in the 50% neighborhood, not 90%, which they used to be. So comfortable buying a little bit more here. And then, actually the private crypto markets have not corrected that much. It's really the public markets where the real damage has been done. So that's where I did a little bit more buying as well, personally.
And Ethereum too, you like?
Ethereum is part of that for sure.
Okay.
We love the smart contract leaders.
Yeah. Okay, great. Well, Jan, it's been fascinating to get your take. We'll be watching really closely and tracking this approval. Do you think Grayscale has any better of a chance than you guys or anyone else?
I think we're all in the same boat.
Yeah. Is it important to be first?
Well, if so, they're going to be first. I mean, if they're going to be treated like all the other ETF sponsors, it's hard to compete with a $27 billion fund. Right. But we'll see.
Okay. Jan, thank you so much. We'll talk to you again soon, I'm sure.